All right, so good evening, everyone. Welcome to this panel discussion on banking and finance. My name is Paula Anderson, and I'm going to be the moderator for the panel discussion. April is Financial Literacy Month, and so we wanted to host this panel discussion because we know financial literacy is something that we can actually talk about 365 days of the year. But because of the month, we wanted to pull together some panelists who are working to help entrepreneurs and small business owners to scale and grow. So we're going to start off by having each panelist to introduce yourself and tell us a little bit about the resources that you offer. So we'll go with you, Danielle.
Hi, my name is Danielle McGee. I'm the founder and CEO of Black Business Boom, as well as nonprofit organization Boomin University. And we are dedicated to providing the training and support that small Black-owned businesses need in several markets throughout the country, with Memphis and Nashville being two of our primary markets. We offer a variety of different trainings, including our Boomin Marketing program that offers training for 4 weeks on how to market and grow your business. And then we launched our Boomin to the Bank program a couple of years ago, which is all about financial literacy for small business owners. We include free training as well as free mentorship and coaching, coupled with resources like free bookkeeping as well, because that has been one of the gaps that we've seen historically in working with our audience. And then we also have launched a program called Ready to Boom, which helps business owners who are ready to scale their business and do business with government as well as corporations, and helping them with their contract and capital readiness through that program. And lastly, we are a Kiva referral hub where we're able to do microloans up to $15,000 at 0% interest for small business owners as well.
All right, Jarlicia.
Hi everyone, my name is Jarlicia Jones. I have the opportunity to serve small business owners as a lender here in the Memphis market. I work for an organization called Pathway Lending. Pathway is a community development financial institution that has been around for 25 years, and we serve the entire state of Tennessee. Pathway Lending serves young and established Tennessee small businesses seeking the opportunity to grow and expand. We specialize in working with veteran, women, minority, rural, and low-income borrowers. Normally, our clients are the first time working with us when they're seeking funding or have been declined from a traditional banking institution. We provide an array of loans from working capital, term loans, equipment, real estate microloans, accounts receivable, anything that is small business. That is our focus. Our loans range from as small as $5,000 up to about $5 million. In addition to our lending, we provide learning as well, where we have a team of business advisors that provide assistance to entrepreneurs through the loan process and support afterwards. So that's a little bit about Pathway and who we are.
All right, Rod.
Thank you, Paula. Good evening, everyone. My name is Rod Loggins. I am the Community Development and Engagement Officer for Cadence Bank. I cover the entire state of Tennessee and a few other states. It's an honor to be able to come before you this evening, talk about some of the things that we do here at Cadence. We are full service bank, and so from treasury management to small business lending. One of the things that differentiates Cadence from a lot of other banks is that we are a direct SBA lender. So we offer loan opportunities for startups. And so we offer the 7A loan as well as the 504. And so one of the things that we pride ourselves on is building those relationships, because it's crucial that if you're going to start a business, that you must have a banking relationship with the local entity, because relationships is key. So again, thank you, Paula, for giving us this opportunity to share what Cadence does.
Thank you. All right, Jonathan.
Hey, good evening, everyone. First, I want to thank all of you for making the first step by joining this lovely event tonight. And yeah, kind of piggybacking off what Rod said, me and him are going to be pretty close to the same, right? We are here to help the community. When you have a business idea, right, you need to have a banker that you can trust in your market that can help you make those financial decisions. And so one of the things that we pride ourselves on at Regions is we have what's called a green print, and that allows you to come up with a personal plan for your business or for yourself as a consumer. And so it is personalized to your business. We ask you questions about your business, and at the end of it, we can talk about goals that you have set for your business and help you achieve those goals. But Other than that, we basically have a full suite of business, products that can help you with payroll, can help you with benefits, help you with savings. We are an SBA lender as well. Yeah, me and Rod, we're going to be a lot of the same.
Okay. Now, Jonathan is based in Jackson, Tennessee. So that's the market that he serves. So what I tried to do was try to get everybody that covers a city in the state of Tennessee. So I think Knoxville is probably, well, Rod, you said that you do the entire state. So we got everybody covered. All right. So we're going to just start off.
Cadence does not have a footprint in Knoxville. We do everything but Knoxville, Far East.
Halfway does though.
Okay. All right. So we got all of the major cities in Tennessee covered here tonight. So let's start off by talking about personal credit versus business credit. So sometimes when you have startup businesses, they focus on their personal credit when they're trying to apply for a loan. So what are some of the barriers when you try to use your personal credit first versus establishing business credit? And let's start with you, Rod.
Great question. When it comes to business lending, most lenders are going to take a global perspective. So it's very important that you maintain high quality personal credit, even though you want to establish your business or your business credit independently. But because it's going to be a global perspective, both those items, the personal credit as well as the business credit, are going to play a key role in the credit decision. You don't want to commingle the two, but I know there's times where you're just starting that you may have to fund your business with a personal credit card just to get started. But at some point, you want to be able to identify your business separate from your personal.
Okay. Jarlicia, how does Pathway view that concept?
Yeah, I definitely concur with Rod regarding Pathway takes a look at your personal credit. A lot of times entrepreneurs who are coming to us are earlier stage, and so they might not have business credit established. So at Pathway, we typically like to see at least a 600 credit score. And with that, mainly everything being current, that there's no, current charge-offs or things of that sort. We're really a flexible lender. I can give you an example. I know a lot of banks, if you currently have a bankruptcy on your credit report, will not lend to you at all. I've been able to lend to some individuals who have had bankrupts, who have filed bankrupt within the past 2 to 3 years. So we really look at each entrepreneur as an individual. But I would say at that starting point, we would like to at least see a 600 credit score because of a lot of times as an entrepreneur, you are running the finances of your business. And that is one of those key indicators as far as character is how do you plan on handling the funds and the repayment of a small business loan?
Okay. So Danielle, since you're working with entrepreneurs who are trying to, get funding, what are some of the challenges that you see within your organization with entrepreneurs?
So I
personal credit?
definitely wanted to come at this from a different direction because I do work a lot with the small business owners. And, as someone who is active on social media, as most entrepreneurs or a lot of us are, we see a lot of content these days around business credit. And there are these folks that are presenting as business credit gurus and giving you all these tips on how to go out and get these trade lines and build this business credit. And so many of the business owners, when they come into our program and we're highly focused on improving their personal credit, they don't understand why that is. When they've been hearing online, you can just go out and get these, business credit cards and these other things. And so we try to make sure that the business owners understand that if you're going to a traditional lender, whether it be a CDFI or a bank, they are going to look at your personal credit. They are going to ask for a personal financial statement, so you could have gone out and built, all this business credit or, been focusing on getting all these business credit cards and then still put yourself in a position where you can't get the funding that you need when you need to, especially if you're trying to go buy a commercial piece of property, or scale your business that requires some traditional funding. So while I don't think there's anything wrong with establishing business credit, I think that we have to understand as entrepreneurs that you can't neglect your personal credit and that a traditional funder is going to pull your personal credit because, again, in a lot of cases, you're going to have to do a personal guarantee or they're at least going to judge, your character based on what your credit indicates.
Okay. So Jonathan, what approach does Regions take when it comes to personal credit and using it as a measurement for
Yeah.
funding?
Yeah, so I mean, personal credit is a huge key. I think if your personal credit is not where you want it to be, obviously you need your personal credit. We try to shoot for 640 or better, right? 640 is going to put you in that bracket to where, we have some opportunity below 640, but the magic number is 640. If you can get to that or above, it's going to be a game changer for you personally, right? It's going to give you that buying power, on the personal side, but also it's going to help you on your business side as well. But, in order for you to get business credit with us, your personal credit has to be in good shape. So, they're hand in hand, in my opinion, with what I see on a day-to-day basis.
Okay. So let's talk about the different types of funding options. So microloans and then a community development financial institution. So Danielle, I know that you offer some microloans. So why don't you give us a brief description of what a microloan is?
Absolutely. So, and they are defined differently depending on who you talk to, because an SBA microloan might be, still a pretty big loan. Because our target is micro enterprises, we are typically referring to loans that are 50,000 or lower when we talk about microloans. And just to give you a little background, just kind of on my journey with micro lending, I got my first loan, business loan, through a CDFI. So I'm a huge proponent of CDFIs because they typically do have the flexibility to meet early stage entrepreneurs where they are. And so my very first business loan 12 years ago was through a CDFI on the south side of Chicago for $10,000 with a 600 credit score. And I was shocked that they approved me. I just took a chance. I've also gone on to get a loan through Kiva, who we partner with now to do micro loans. Kiva has very flexible requirements, no minimum credit score. So that is a hurdle that for a lot of entrepreneurs of color, either not having established credit or, may have messed up and made some mistakes along the road. So have lower credit score. So we're happy to have a partner that eliminates that barrier for small business owners. And those loans are available up to $15,000 at 0% interest. But we are also seeing a lot of the local banks and banks that are moving into the area that are now understanding the need for micro loans and like true micro loans that fit the needs of micro entrepreneurs. Because again, many times folks will say we offer micro loans and then the minimum is $50,000. And so there still was a gap there. So we're now seeing a lot of banks that are lowering that minimum requirement for micro loans as well as CDFIs. And I think that has been really helpful to the entrepreneurs that we serve. And then we've also seen that they are understanding that there needs to be some level of flexibility to if you want to serve certain populations as well, especially if there's a focus on low to moderate income individuals, that sometimes we have to find ways as organizations to make sure we're solvent and responsible to our board while also still trying to meet the needs of those that we want to serve as well. And so luckily, I think over the last 4 years, we've seen a lot of changes in this landscape of micro lending that have made capital more accessible.
Okay. So Jarlisa, I want you to explain what the CDFI is, and then Rod and Jonathan, I want you to just kind of talk about if your bank offers a microloan.
Okay, so as mentioned, Pathway is a CDFI, which means Community Development Financial Institution. We're a nonprofit mission-based lender. So we are not a bank, we're a lending institution. And so the offerings that Cadence, the Regions have is not our reach. We don't take on any depository accounts. So that's your checking or savings account, nor do we do any consumer type of lending. So you can come to Pathway for your mortgage for a personal home or a car loan, anything like that. We are specifically focused on supporting small businesses. And so within our mission, a portion of our loans have to be allocated to African-American owned businesses, low to moderate income census tracts, as well as low to moderate income borrowers. We do have a focus on women-owned entrepreneurs, as well as veteran-owned businesses as well. And so we are not regulated by the FDIC, which allows us to have flexibility within our underwriting standards. And so one of the requirements that was mentioned earlier on is credit score. That is a huge barrier for a lot of entrepreneurs. And so our credit score is a little bit lower, as well as we can loan up to 100%, where some banks might require, for instance, if you're looking for a piece of equipment, you have to put 50% down and then they'll loan you the other 50%. Pathway, depending on the use of funds in the business, we could possibly loan up to 100%, or maybe we will require you to put down 3% or 5%. So we're trying to create flexibility so that more entrepreneurs can have access to capital. We do have a lot more flexibility with our terms as well. So for a lot of our clients, we're able to do interest only for an extended period or stretch the loan payment out a little bit longer. A lot of times, business owners come to us because they've gone to a traditional banking institution first, and maybe their business too early stage, or there could be one out of the 5 C's that they don't meet, and a bank cannot provide them lending because banks are risk averse. And so if you don't meet their boxes or their metrics, they can't provide lending to you. Whereas Pathway, we're always trying to get to a yes, or if it's not a yes right now, we will refer you over to our education team to identify what is the roadmap to be able to get you funding at a later point or time. So there is so much more flexibility in how we lend. I'll also give an example as far as, it was mentioned earlier, the global debt service. And so we take a look at that, and a lot of banks are 1 to 4, where we're at 1 to 1.5, which means we have a lot more flexibility within our cash flow, because we understand that entrepreneurs are very creative with how they use money, how they run and operate a business. And so if you can demonstrate through financial projections, through a business plan, that you have a strategy to use the funds to grow and scale the business to the next level. We take that into consideration to assist with the funding. So I would say that's probably the biggest difference between CDFIs and potentially a bank, if you're interested in lending.
Okay. So Rod, why don't you
Yeah.
explain if you guys have a microloan?
Okay. We do not have a microloan per se. However, we do offer what we term a credit builder loan, which basically is we will lend a small dollar amount, put those funds into a CD, and allow the individual to build their credit while saving money at the same time. One of the things that we do as an organization is we actually invest in CDFIs because there is a need in the community, and sometimes banks may not have the reach to reach some of those communities directly, but being able to partner with organizations that have that network is a way banks can actually facilitate that need to reach the community. So to answer your question, we don't have a microloan per se, but we do offer something very similar.
Okay. Jonathan, what about Regions?
Yeah, so obviously there are going to be some things that are going to be a SBA play, right? So SBA has some micro lending on there. I don't deal with SBA all the time. We refer out to our SBA lenders on that, so I can help facilitate and get you information on that if you came to see me about a micro loan. But I would have to get one of our SBA bankers involved. And so we have a small cap SBA banker and a large cap, SBA banker that they specialize in that, right? So, but kind of similar to Rod, we have the same thing on our business and consumer. We have products that you would put, cash secured down, and then that could, be used to however you want to do, lending wise. So we have one for business, and then we have one for consumer as well. So I know on the business side, there's a minimum of 5,000 that you have to start that for business credit and everything. And then on the consumer side, it's about 250 on there to kind of help. So if you had a small business owner that needed to work on their personal credit, they could come into Regions and talk with any banker about our secured Explorer credit card that could help. We have secured loans, secured lines of credit. The minimum's $250 on that. And that, the biggest thing is you want things reporting positively on your credit, right? So a lot of times people think that is going to just help your credit, right? No, you still have to make your payments on time. It can still hurt your credit, even if you're using a secured thing. So there's kind of some misconception out there. It's looked at as a credit builder, but it also can still hurt your credit because it is just like a regular credit card if you did our Explore credit card. And so same thing with the secured loans. If you were to do that and then you don't make your monthly payment, it's going to reflect negatively on your credit report, right? And so, you've got to just make sure that if you do that, you've got to treat it like it is a regular credit card, even though it's secured by your money. So, you just want to make sure that those on-time payments are getting paid, at least the minimum, right, on there, and getting some things reporting good on your credit.
Okay. And one of the things that I want to point out is that everybody offers something different. So it depends on where you are and what stage you are in with your business. So a product that Regions offers may be a good fit for you, or a product that Pathway Lending offers may be a good fit for you. So you have to kind of determine what's going to be the best option for you. There is no like one size fits all here. So you have to think about how you're trying to grow your business and what you're trying to do, and make a decision on what's going to be the best option for you. So I just want to make sure that that's kind of said, put on record. So let's talk a little bit about the State Small Business Credit Initiative, which was actually started in 2010. So we know that over the last year, the state of Tennessee and other states have received a lot of different funding to help small businesses grow. I attended one of those initial meetings in Jackson, Tennessee last year and wrote a brief article about the concept. So I know that that was like the emphasis stage back last year. So I know that Pathway Lending is a part of that initiative. So Jarlicia, can you talk a little bit about Fund Tennessee for us?
Yeah, so it was an amazing program hosted by the Tennessee Department of Economic and Community Development. And so it's about $47 million that was allocated for CDFIs and lending institutions to provide small business opportunities across the state of Tennessee. And so, yes, Pathway was one, Communities Unlimited, River City Capital, the Tennessee Rural Development Fund, and then the Roots Capital. And so essentially, we were all tasked with the opportunity to continue providing lending to entrepreneurs across the state. So the process looks very same to what we're doing today. There's not a huge difference or shift as far as our support to entrepreneurs throughout the state of Tennessee. The funding we received just has allowed us more funding to continue doing the work that we're currently doing.
Okay. What are the measurements that you guys are going to have to report for the businesses that you fund money to? Is there like an annual report that you guys are going to have to provide to the state of Tennessee on the progress?
I'm not sure. That wouldn't be something that I would be privy to. So,
Oh,
but I
okay.
can tell our client, the people that are on the call, what the requirements and criteria is to apply for a loan with Pathway. That'll be helpful for them. Okay.
Okay.
Yeah.
Did anybody else want to speak to that initiative? I know that Pathway is directly involved, so that was targeted toward Jarlicia, but I'll give anybody the opportunity to respond.
I just wanted to hop in and say that not only are there loans available, also under the program, there are investment dollars available as well through Launch Tennessee. So there's no one, here from Launch Tennessee, but it's another great organization that serves the entire state and has funding available for small business owners. And so if you aren't connected with them, that's another great opportunity to get connected to learn more about the Fund Tennessee and Lend Tennessee initiatives that are going on as well.
Yeah, and I believe the Co
Okay.
here in Jackson is a CDFI here in Jackson, so they could help guide some of our Jackson business owners that are on the call tonight about what Danielle and Ms. Jones are talking about here. So yeah, and you're correct. I was at one of the meetings as well. Yeah, they have the investment side, the lending side, but I know there's different criteria for each one on there. It's been kind of like a myth, to be honest with you, about Fund Tennessee, because you try to find out more information about it and you add your email, but you never get emails about it. So I appreciate the information y'all are giving today, because this is information I can give to people I see here at the branch. So thank you for that.
Okay. Rod, did you want to add anything?
No, I appreciate it, but this is good information to take back.
Okay. All right. So let's talk about the Paycheck Protection Plan. Now, we know that that was a part of the COVID relief funding, and several businesses, apply for that. So I know Rod and Jonathan, you may have had some experiences with that. What are your thoughts about the post-COVID pandemic as relates to that program?
First of all, the PPP loan was a game changer and basically saved our economy, in my opinion. The majority of all businesses in the workforce are small business in operations. And so being able to provide those funds at a time where it seemed pretty grim was a good move. However, not everybody had access to those funds. And so as a result, there may have been some conversations and some concerns as to why certain demographics didn't get access to these funds. But overall, I think it really saved the economy. And so post PPD, I think a lot of businesses are thriving. One in particular, there's a hospitality industry individual who took advantage of the PPD loan. He was able to pay his employees, didn't fire anybody or term anybody. That was some years ago, and they're still employed with him. And as a result, his business, he didn't lose a lot of money during that time. He was able to restructure his loan as an interest only. And so the banks were able to really help him. And so that's just an example of what happened during the pandemic, taking advantage of the PPP loan, and then afterwards being able to be stabilized to continue to be successful in business. So I thought the PPP project or programs were great in the grand scheme of things. Could it have been better? Could everyone had more access to it? And that would be yes.
Okay. Jonathan?
Yeah, I agree. I think it was a blessing for the ones that took advantage of it and followed the process, right? Where can you get a loan to access of a certain amount of money and it get forgiven, right? So if you followed the process, you were really blessed, right? But again, it moved so fast and so crazy just due to everything going on in the world that there were a lot of people that missed out that deserved it, right? And unfortunately, I think there was just a breakdown in communication because there was so much chaos going around during the pandemic. And I mean, I come into work one day, they're like, "Hey, this is what's going to happen. Let's go." Right. And so it was just moving so fast. There wasn't time to communicate with everyone. Right. You either knew about it or you didn't, or you talked to somebody that knew about it. But at the end of the day, one thing I'm really proud about with Regions is, just my boss alone, we had to dedicate specific bankers that all they did for 2 years was PPP stuff, right? And my boss alone did 30 million himself in PPP lending, right? And so that's just one person in our market, and we had thousands of people working on that, right? And so a majority of those did get forgiven as well. You could use it on keeping employees employed with you. You could use it for upgrades. At first, when it first came out, there was only certain things you could use it for. And then once it came out, they said, "Hey, you know what? You can use it for this and this." So I think some of that kind of deterred people too from wanting to do it. But it ended up everybody that I saw did it. And then the ones that we missed, we got on the second round. They missed out the first round, but then they had the second round. And so, that's where we had a little bit more time to catch up with some of the ones that might have missed it on the first round. But yeah, there still was people that deserved it that missed it, unfortunately. And, nothing we can do about that now. But, I was very proud that we were taking care of people because there was a lot of uncertainty at that time in the world. And, I'm glad that we stepped up and had something in place for the people that make the world go around, really, the small business owners, right? So but there was churches getting it, there was HOAs getting it, I think I saw all types of businesses getting it. So it was a wild time for sure. But depending on who you talk to, they might be glad that it's over with. So But yeah,
Yeah.
And so to follow up on that, you said, okay, going forward, that relationship piece, some folks were not communicated because they may not necessarily had the relationships with the banking community or the banking industry. And by the time the word got out, the spout was cut off. And so today it's important for our entrepreneurs that are on the call is to start establishing a relationship with a banker. You need to have a relationship with a banker, you need to have a relationship with an attorney, and you need to have a relationship with an accountant as a business owner.
Yeah. Well, to just kind of echo what you guys were saying, I think the second and third round made it a little bit more equitable. There was not a blueprint for what was happening. So all decisions were being made in real time. And so once they realized that there were sole proprietors who were missing out because they really didn't have like the corporate structure, then there was some alternatives, and that's when the CDFIs were brought into the equation so that they could service those sole proprietors who did not have like a payroll such as a large corporation. I want to get to a couple more questions before we open it up for the panel, for the questions from the audience. I want to talk a little about, so I know that Jonathan and Rod, you service all different cultures of entrepreneurs and small business owners, but I know Jarlicia and Danielle, you kind of have like a targeted approach to who you're servicing. So why do you think it's harder for Black-owned businesses to get access to capital? You can go
I
first,
think,
Danielle.
okay. Yeah, I mean, there's so many reasons, but I'm gonna touch on the one that's most important to me, and that is the capital readiness. And many of us, this really ties into the conversation that we're just having about the PPP, because many of us were not ready and we did not establish our business and we're not conducting ourselves as real businesses, which is why when they said applications are open, we were scrambling or just couldn't take advantage. In all transparency, I was one of those people. And so I tell my story to other entrepreneurs so that they understand, that you can get caught up and like my mother always told me, if you stay ready, you don't have to get ready. And when the PPP opportunity came out, I was not ready. Now I had a business bank account. I knew enough to have a business bank account and to have it connected to QuickBooks. And so, but was I actively going in and reconciling my books? And no, I wasn't, but I had at least set up some foundational things so that when that opportunity came up and I was like, oh no, I just filed my taxes and didn't put the business on there, I was able to go back and reconcile my books. And then I was able to do an amendment to my taxes really quickly. And I had a relationship with my banker where all I had to do was shoot her an email and she sent me the link to log in and get my application done and helped with any other steps that I needed to get it done. And so there are just some foundational things that I like to encourage small business owners to do, and that includes separating your business funds from your personal and having the business bank account, and at least having some sort of QuickBooks software and being active in reconciling it if you can't afford a bookkeeper at that time. And so many times these opportunities are happening. We've seen them happen so much more over the last 4 years, but us as the small business owner have not done our part to make sure that we're ready to take advantage of the opportunities. Of course, there are all these historical, inequities and things that have shut us out of participating in certain things. But I think it's important, especially as minority business owners, that we understand that there are already challenges that exist that are systematic, that are going to always be there more than likely. And so sometimes we do have to work a little harder, but we at least have to have the foundational things. We can't complain about the system not fitting our needs when we are not doing the things that everybody has to do as a small business owner. We all have to have these foundational things in order. So again, there are lots of different challenges we could talk about that we experience as minority business owners accessing capital, but I think that it's important that we talk about the part that we play in the process as well.
That you couldn't have said it any better. That is 100% on point. And so kudos to you, Danielle, for sharing that.
So before Jarlicia responds, I want to just say that capital readiness. So when, somebody hears that terminology, do they really understand what it means to be capital ready? And some business owners, they may not have the trust with certain individuals. So it's like you still have to get people to a point where they feel like they can hand over their finances. So, and what I mean by that is, like, if you're getting applications through social media and you're asking me to provide you with my income and all of this financial data, that's not going to be an option that I will feel comfortable with, because I don't know who is actually receiving that data. So, and I think that, and I know technology is the way that we collect information, but how do you feel, and Jarlisa, you can answer this, how do you feel, what is the best approach for trying to help people to understand the capital readiness and get them ready and meeting them where they are?
Yeah, just echoing Danielle, I think African Americans have been in business for a while, but it's how do you formally go about your business? And so I was going to definitely reiterate your point as far as what is capital readiness and what does that look like? So I would say, and I definitely want to share what a standard loan package would look like so people know exactly when you're going to the bank, what information is required. And it looks a little bit different from Pathway depending on what stage of business you're in, but I'll just say a pretty much standard application. It's 2 years of tax returns for your business and personal, because you're going to probably personally guarantee that loan. Current financial statement, meaning a balance sheet and income statement. Profit and loss, understanding the language of business. What is your profit? What is your revenue versus what is your profit, which is bottom line, understanding the difference between those two. Having a business debt schedule, knowing what current current debt your business has, as well as a personal financial statement. And so those are pretty much the standard documents that you have across the board. Now, Pathway at our organization, we can hold our entrepreneurs' hands throughout the process and support them. A lot of times you were talking about one of what are the challenges with access to capital. Credit is a huge one. Though our credit score is 600, I still have a lot of entrepreneurs who aren't able to meet that metric, and they have a great business model. But like we talked about, character and the ability to repay. You might have the money to repay, but if your credit score is below 600, will you repay? That's one of the questions that people have. And so I would say definitely reaching out to your potential banker, having a conversation. Ms. Anderson, there's a lot of people that I talk to who want to meet in person as well to feel me out, to see, who is this person they're providing documents to. And I don't mind that, but also in the world that we live in, a lot of it's technology based, and just having that understanding that you might not have the opportunity to sit down and meet your banker at that point in time. I just think about when I bought my house, I have never met this lady, but we emailed back and forth all the time. But she was able to get everything processed for me to buy the house. And so just having that understanding. But I think if people know what they should, if people know what they're being requested, they can prepare better, and it shouldn't catch them off guard, because they'll know these are the standard documents that any bank is going to ask me for.
Okay. And I agree with you as far as the capital readiness piece of it, but I think probably generations is going to factor into, like, I can't just email. I got to meet you at some point. I got to talk to you on the phone. I got to come to your office. I got to gotta see you at some point before I finalize that transaction, because that makes it more human, more real for me, because I'm Generation X. So that's kind of the way that I establish and build relationships. Before we move on to a couple more questions, anybody want to respond
I just wanted to
to?
hop in and say, I don't, the meeting part I can understand, but that doesn't really impact, that doesn't have much to do with the readiness of, like I'm sitting over here ready and I don't need any capital, right? But if the need arose, I have everything I need ready to present to whoever I need to meet with, whether it be virtually, in person, uploading through a portal, whatever it might be. So, even though there is absolutely a severe lack of trust when it comes to black people, and we've been taught to not trust different systems and not trust technology, and these things. So I completely understand that, but it's about really being willing to do the work on your own. To be ready, that doesn't mean you need to be actively going to seek capital right now at all. It just means that you're doing the foundational things that you need to do, so that, again, if you stay ready, you won't have to get ready when an opportunity presents itself. You should have your tax return. You should be filing your business on your taxes and filing accurately, because that's another thing that we've been taught. Just write everything off and then you don't have to pay the taxes. But then you also can't go borrow money. So, there's a lot of unlearning that has to happen in our community, but we really have to tune out the noise, especially now that there's so much noise online. I think we have to tune out the noise, really get to the real resources and the people who are really trying to help us, and then take action, because it's nothing to, many entrepreneurs, they'll sit in these classes, they'll learn all these things, and then 6 months later, hey, did you open your business bank account? No, I didn't open the business bank account. What are you waiting on? That is something you don't have to meet with somebody. You can open an account online free. So I think it's important that we get away from the excuses and the blame game when it comes to capital readiness. And that if we know, we want a real business and we want to be able to get we may need to get capital at some point, that we actually show up and do the work that we have to do to prepare ourselves.
Okay. Are there any questions from the audience?
I think there was one in the chat.
Lee left a question. She said, what is the best way to build banking relationships with bankers? For people who have never worked traditionally with banks, what are some tips for them to start the relationship?
I would say walking into the bank and introducing yourself. Walking into the bank, introducing yourself.
Introducing yourself.
And just saying, hey, my name is, and I'm interested in learning more about your bank, and I would love for you to learn more about my business. And if you capital ready when you walk in there, that conversation will even get deeper.
And I think I'm sorry, go ahead.
Yeah, I was going to concur with Rod, getting to know your banker, again, building that trust, right? We want to help anybody that walks in our doors, right? But we can only help you if you're ready, right? We can guide you. I can tell you everything you need to do to make this happen. But at the end of the day, it's up to you to do it, right? And so, I think the knowledge is power, right? Do we share that knowledge with other business owners like we're doing today, right? Find somebody, if you don't trust a bank, find somebody you trust in the business world that you've made a connection with, that is successful, right? They can help you. They will help guide you. Bankers work off referrals, right? And so the biggest way I get repaid is being referred more business, right? And so if somebody has trusted me with their business, their family, their friends, if they refer their business to me, I'm going to take care of them just like I took care of the person that referred them over to me, right? And so, kind of piggybacking off Rod, introduce yourself to a banker. Hey, I'm Jonathan. I'm a branch manager at Regions Bank. This is my business. This is what I do. How can we work together? Right. And so you'd be surprised of what just a small conversation, we're in the conversation business as bankers. And so you just start talking with a banker, and you'll be surprised at what you can find out and learn. And you may even teach the banker some things. Right. And so, I've learned a ton from my business owners that I take care of and service. So, just, having that trust and following somebody that you trust is the biggest key, I think.
And I'm gonna add something to what Jonathan just said. We as bankers need you more than you need us, because we need deposits, we need loans. And if you come into our office and you say, well, this is not the bank, I missed the opportunity. But you can go across the street and like what you see across the street, and they can gain that opportunity. So we need you. So you add value to the bank. And remember that as an entrepreneur, as a consumer, you add value to banks.
And just to kind of recap just a little bit, I think going into the bank and like having a face-to-face interaction, that's really how you build the authentic relationship, because you get to hear their voice and have a conversation. They get to learn a little about, well, why did you go into business? And those are factors that kind of help whether or not they're going to give you a loan. So I think going in physically is a good way to start that relationship. There is a question from Z where she asks, you mean I cannot use my EIN number? Good information that more new business owners need to know about social media. So I know we talked about the business credit. So I think that question is based off of that conversation. So
Yeah, you
anybody want to
you
answer?
still need your EIN, but however, I do want folks to understand that you can go into a bank and open a bank account as a sole proprietor using your own social security number and still separate your funds. So most banks have the ability for you, but you do need some sort of documentation. So I would encourage the business owner to still go get a business license or go get something. Every state has different requirements as to how you establish a sole proprietorship. So, but you can still establish an entity as a sole proprietorship and open a business bank account with your social security number. And so some people are like, oh, I'm not going to open a business bank account until I get this LLC and get this EIN, when you can still not commingle your funds and have a separate business account using your social security number. So I did want to just put that out there.
Okay. Jackie wants you guys to go over basic requirements again for capital readiness. So, Jarlicia, do you want to address that?
Yes, so the clients I have opportunity to work with, depending on how long you've been in business, it's really hard because we provide loans for pre-revenue entrepreneurs as well. So I would say 2 years of business and personal tax returns if you've been in business for 2 years. Year-to-date income statement and balance sheet. So year-to-date would be January 2024 through February 2024 income statement and balance sheet. A personal financial statement, which is essentially as an individual, what are your assets and your liabilities? A lot of times banks take a look at that to determine what could be potential collateral for a loan, as well as doing a debt service calculation as well. A business debt schedule for you to disclose any other debt that the business potentially has. And then another item I'll include on this list, because all entrepreneurs should have it and it should be updated regularly, would be a business plan essentially. And with those business plans, definitely to include financial projections as well.
Okay. All right. So I want to ask one more question before we have to end our conversation tonight, because I want this to be a part of the conversation. A community reinvestment act. So what does that concept mean, and how does that concept help business owners or the community? So Rod, do you want to start us off with that, the answer to that question?
Yeah, one of the things, the Community Reinvestment Act, a lot of people think that's a ethnicity type law, when in fact it actually started by a lady by the name of Gail Sincata, if I'm pronouncing her name correct, out of Chicago actually. And she moved into a neighborhood and had her kids go to a school, and all of a sudden, it was in the 60s, and then all of a sudden the community started changing. People started moving out, and they started to redline, and so she didn't like what she was seeing, so she became an advocate and an activist to fight against it until the laws came out, the Community Reinvestment Act. It basically required banks and savings and loans to offer credit throughout the entire market areas and prohibits them from targeting only wealthier neighborhoods. And so it's basically banks having a recommendation to lend not just to certain demographics, but to everybody. And so it's not a black thing. It's an income-based thing. And so to answer your question, how does CRA affects lending today? Every bank makes it a point to try to go out and lend throughout their footprint. And sometimes it doesn't always turn out that way. But I think for the most part, banks want to do the right thing. And unfortunately, it doesn't always turn out that way.
Okay. Jonathan, did you want to share anything about CRA?
Yeah, I think definitely, following Rod there. Same thing here, nonprofits. So we had a deal with CRA. So CRA, has specific goals that they are required to do, right? And things that they can do that I might not can do at the branch, right? So I had a nonprofit that I work with that wanted to expand, right? So they're a huge food bank. And so we looked at some lending opportunities for them, right? So I was talking to my commercial banker, and he's like, "Hey, this may be a CRA play that we could do, right?" And so most banks are going to have. Not, I'm not a professional at the CRA. I've only had a little bit of dealings with our CRA department on a lending deal, but we were able to partner with our CRA department here at Regions on this deal, which was for $1 million, to be able to expand this nonprofit, right? Because they meet certain requirements that are looked at for the CRA under that, and so the deal didn't go through, and that's fine. But that those are the opportunities that CRA gives to small businesses that may meet those requirements that we need to fill, right, for the communities and things like that. So I think going back to that, trusting the banker that you're dealing with, right, if they're doing what they should do, they may have to think outside the box, right? And they have to know what is available to the customer that's sitting in front of them. So, it's kind of, there's a lot of moving parts in banks, and you just got to have the right banker to know where to put you at the end of the day. It's not what you know, it's who you know, and getting the right things in place, right? And so I understand CRA and what needs to be done of it, and yeah, I think we could do better jobs with it, but I think it's just knowledge about it, right? So the more we know about it, the more we can help and put things in place. So that's why we have special people that we refer to if an opportunity arises for CRA things. And part of the CRA thing I'm super proud about is we're heavily involved in the community. We offer what's called a Next Step program where giving financial wellness seminars and things like that is, we don't charge anything for that. So, you don't even have to be a customer of the bank. You can say, hey, so Danielle, you mentioned you're a small business owner. Like if you wanted to add an extra benefit to your employees, if you have employees that work for you, we could come out and do a financial seminar based off of, certain criteria like credit reports. We have a whole list on our website that you could look into to do that. We also offer it for small business owners. So, that's part of our CRA thing that we do a lot of as well. So, and most banks have to keep a file of your CRA of what we do under the CRA Act, right? And so, if you want to request mine, we can get it for you. It's about 1,300 pages, and I have to put in a special request for you to get it sent to you. Or you can get it on a little CD drive. But if you follow a lot of FDIC banks, that is part of the requirement of a bank is to keep that on file. And just so you know, Regions' last CRA exam that we had was in 2022, and we did pass as satisfactory. So.
Okay. So this is what we're going to do. So we're getting ready to wrap up. So I'm going to go around and have each panelist to just give some closing remarks. You can focus on like the resources that you provide or what kind of advice that you would give to a small business owner or entrepreneur as it relates to capital and lending. So we'll start with you, Danielle.
All righty. And you said just give some advice. So the small, I would say
Yes.
just reiterate what I said earlier. Very important to open a business bank account, and you don't have to wait to do that. There are a lot of free accounts out here. As a former banker, I know that there may be folks out there who have dealt with not only credit challenges, but banking challenges. Get that cleared up if you're on check systems or whatever the case may be that's stopping you. Whatever's stopping you from getting your business bank account open, deal with those things and get them resolved and get you a business bank account and learn how to use Wave or QuickBooks to at least reconcile your transactions and be able to provide financial statements. Those things will set you up to be successful in the future. And again, we have programs that are here to help you. So if you are interested in our Boom Into the Bank program, we have 5 programs this year. We'll be offering that program 5 times this year, starting in May. And you can participate in the program free of charge. We have scholarships. So if you're interested, you can go to boominU.com/scholarship and apply for a scholarship to participate in the program free of charge. And everything we talked about tonight as far as capital readiness, we're going to walk you through that in the program. So thanks so much for having me, Paul.
All right. Jalicia?
So one thing that I will reiterate is definitely be relationship based. I think everyone has said that today. And this is a great opportunity. Paula has done a great job of having representation across the entire state of Tennessee. And being in a financial institution, we all have resources and know the people that we can connect you to. The world that we live in is so amazing that you don't have to be in a place to connect with someone. And so if you have a specific question about business or something industry related, would love to connect with you because we see so many entrepreneurs that come in and out of our doors that we provide lending to, that maybe we can make a connection there. And then the second thing I will reiterate is it's very important to have a business plan. It doesn't have to be this elaborate document, right? That's 1,000 pages, but definitely put it out, make it clear, look at it, see the progress that you're making, but also make pivots and changes, be flexible. I think the past couple of years with COVID, we've all learned how to pivot and be flexible. And then just to go back to what Danielle said, having your business bank account separated from your personal is so important. Take the time to understand what an income statement is, how to read it, how that information can provide value to your organization, to be able to create strategic changes for your business. But again, you don't have to know everything. there are a plethora of resources out here for entrepreneurs to start, grow, scale, and maintain their business. So take that into consideration. And you have so much knowledge within the 5 of us. And I'm sure there are other people on here that have opportunities and connections as well. So don't be afraid to speak up because people really want to help you.
Okay. Rod?
Thank you, Paula, for allowing me to share. Jackie, Patricia, and Z, you have taken the first steps to do some amazing things. It's important that you don't just get this information and just sit on it. You've taken the first initial step. Now just keep walking. Because when you walk, and if you walk by faith, then you're going to please God, because without faith, it's impossible to please God. So when you are doing your business, you are actually doing a spiritual work. So don't stop now. So if I can encourage you to establish that relationship with a banker, because you can establish a relationship with a banker today, and as you scale, that banker will help you scale your business. And we, as bankers, we like to brag about how we saw someone with a business plan go from just maybe one widget to thousands of widgets. So congratulations, and I wish you nothing but the best.
Jonathan?
Yeah, I think, kind of what Rod said, you guys have taken the first steps, right? We've given you the knowledge today, and were we really blessed, right? We were blessed today to have the knowledge that we're on here. I'm excited for what the future looks like from what you're doing, Paula. And, we really appreciate everything that's going on. And, just find someone who cares, right? Who cares about you and your business and, wants to help you, right? And, we're always here to help. Paula, you're one of my friends and, really appreciate what you're doing. If I can ever be of service to anybody, I'm here to support you.
Well, thank you guys for agreeing to be a part of this panel. I know that financial literacy is something that small business owners struggle with. I've personally struggled with it myself, but I can say that I have made some strides. And I'm not where I used to be. And so I want to kind of encourage individuals that may not be in a spot where they want to be today, but they're going to work towards getting in that spot later in the future. And so the resources that have been shared here, again, I just want everybody to know that you decide what is going to be the best option for you and where you are within your business journey. And so this recording will be shared. And I will also share the contact information of all the panelists so that you can follow up with them individually if they offer some services that fits your needs. So thank you guys again for joining, and I will stop the recording now.
All right. Thank you so much, Paul.